So, are banks collapsing, and should we be abandoning our long-term financial goals at this point? That's something that we're going to be covering today. So what happened with SVB Bank and Signature Bank, as we know, many of us have been watching the news over the last couple of days. Over this weekend, we've now had 3 major banks fail. So I always get the questions, and I'm sure many people start to wonder, so it's why we do these, is so we can get ahead of those questions. What do these bank failures mean to you? What does it mean to the entire banking system? Is it a systemic risk that's going to form a contagion that's going to run through the entire financial system? And then more importantly is, what should you be thinking about it? What should you be doing? And so first of all, what happened with the banks? And this was a really big question, and people are starting to get scared of, what happens to my money? So basically, what started to happen is the FDIC had to step in and rescue SVB Bank, which was Silicon Valley Bank. And the reason is there was something called a bank run. And Silicon Valley Bank deals a lot with venture capitalists and startup businesses. And these venture capitalists told the banking members or people that were having those deposits at the bank to start withdrawing their money. And the reason they did it is because they realized that SVB Bank went out and said that they had to start raising capital. That started to bring questions. And so we had to dig in. What was the reason SVB started to want to raise capital? What happened to Signature Bank over the weekend that again had the federal government have to step in? Well, one of the major reasons was they bought into longer term bonds. So what happens is, as bond yields continue to rise, when we buy a bond, we are hoping that as long as we hold the bond to maturity, that our principal is then guaranteed in return to us. So the banks were banking on having a complete asset that was going to be worth exactly the amount that it was supposed to be. Well, when the interest rates started to rise, meaning they went out and they did what we call interest rate sensitivity, meaning they didn't manage the interest rate risk properly. And because of that, they took a little bit longer term risk. And what that did was, as interest rates started to rise, the principal value started to drop. So now it's what we call, there was a disconnect between an asset and a liability match. So meaning they had more now liabilities than they did assets, which creates the problem, which means is why they wanted to raise capital. And so when that started to find out, people started to run on the bank, meaning they started to withdraw money. Well, now what started to happen is the banks didn't have enough money to guarantee all of those deposits, and it caused an undue stress, allowing now the federal government to have to step in. And this is what has shook the banking industry, is all of this has happened in a very short time. So many people started to think, what's going to happen to my money? Well, a couple big things started to happen. The federal government did get involved. So over the weekend, they put a backstop in to make sure that they were now allowing and guaranteeing those deposits even over the FDIC insurance amount, which means it's $250,000. So they were guaranteeing even the uninsured deposits at SVB Bank and Signature Bank. So therefore, again, averting a major crisis, it was a big step up. They also created a lending system, which they haven't done since 2008. We all remember what happened in 2008, which many people are questioning, are we seeing this again? And in my opinion, I don't think that's the case yet, and I'll explain that in a minute. But so they created this lending system to allow banks now to use their treasuries and use those bonds as collateral in order for them to shore up so that they had enough money to match the deposit. So like many people said, maybe now crisis averted. The issue is people still are now fearing for themselves as how much now is the government going to insure? Are they going to protect all deposits over $250,000? So that's kind of where we are now. We're to be seen if that's going to happen. And so right now, that's where a major risk that we're still continuing to see is, what's the government going to do from here? So as we look at whether we felt like this was a 2008 crisis, let me let everybody sort of relax. Right now, at this point, we're not in the same situation that we were in 2008. And a lot of that had to do with really bad mismanagement of bank investments themselves that were relying solely and very strictly on the housing market, which we know collapsed and caused a lot of issues with the entire banking system, making now the federal government have to come in and basically rescue the rest of the banking industry. We are not seeing that at this point in time. We are seeing stress on probably more regional banks, and we're probably seeing stress on some financial system right now. But the truth is, at this point, this is more probably like the 1980s, if we've ever been around that. The 1980s caused a systemic issue within the smaller banks because they were highly exposed to the oil and gas industry, which basically was collapsing. And so, but the good news was it didn't put pressure on the larger banking system as a whole, and there was no market stress due because of it. So again, it was very small, and we think that maybe potentially the situation is similar at this point. So many of us ask, what do we do now? I mean, is this something that we should be running to cash? And here's the truth. At this point, these are when you have to trust your financial plan. And the whole key to setting up a proper financial plan is having yourself being prepared with this, whether it's having safe money, whether it's having the right exposure to enough cash, whether it's having enough exposure to safety that allows my financial plan to weather black swan event potentials like this, or and better yet is having an issue like 2008, meaning can my plan handle this if we have repeats of these situations? So having your plan in place is very important. If you don't have your plan in place, now is the great time to start taking a look at your risk and reassessing it and make sure you're having the proper balance between safety and a proper diversified portfolio to help you reach your goals. So where are we? Well, the truth is right now we're waiting and seeing. We're hoping that this contagion doesn't continue to go through the markets. But at this point, we wanted to touch base so that, again, we bring you this news as it's happening to let everybody calm down and see where this situation goes from here. So thanks for watching, and we'll see you next time on Clearview Finance.